Applovin stock is soaring up over 45% after the company reported quarterly financial results. If you look at 2024, the stock price is up over 500%. Of course, I'm really happy about that because I've had Applovin stock rated as a buy all year long in 2024. So I'm happy that the recommendation is working well. It doesn't work well all the time. In the cases that it does make me happy. So why did the stock price soar? And is it still a buy or is it time to take profits? I'll answer those two questions in this video by reviewing the company's latest quarterly financial results and then looking at the company's updated valuation following the stock price increase to determine if the risk versus reward still makes sense for long-term investors in Applovin stock. Let's take a look.
I want to thank The Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
All right. Applovin told shareholders that they had another fantastic quarter in Q3. Their Axon models continue to improve through self-learning and, more importantly, this quarter, from technology enhancements by their engineering team. In the third quarter, they generated revenue of $1.2 billion, which was up 39% year over year. Net income of $434 million, which was up 300% year over year, and an impressive net profit margin of 36%, which has continued to accelerate as a percentage of revenue. That's been great news for Applovin stock investors, and one of the reasons why the stock price is up by as much as it is. 45% up in the day following these announcements. But if you look back year to date in 2024, it's up over 500%, 511% to be precise. The company generated net cash flow from operations of $551 million, which is up by 177%, and free cash flow of $545 million, which is up by 182%. Remarkable numbers here from Applovin. Now, when I see a stock price that jumps by as much as it does, I always want to look at the fundamentals of the business, which I just did. The revenue, the profit, the cash flow. Do these justify a stock price increase of 500%? If a stock price is increasing by 500%, I better be seeing phenomenal increases in those critical metrics in order to justify that increase. Otherwise, I'm going to think that this stock is going ahead of itself. It's increasing before the business justifies those increases. But I don't think that's the case with Applovin. I think the business has justified the increases. As you can see there, net income jumping by 300%. Cash flow from operations jumping by 177%, free cash flow jumping by 182%. So you are seeing these phenomenal increases in these critical financial metrics of the business that demonstrate, that justify a stock price increase of that magnitude. They go on to say that during the third quarter, they retired and withheld a total of 5 million shares of their Class A common stock for $437 million. What that means is they used $437 million of their cash to buy back shares of the company's stock. And that has the impact of reducing the number of shares outstanding, which then increases the earnings per share because the net income will be divided by fewer shares and thereby increasing the earnings per share. It also has the impact of telling investors, sending a signal to investors that the company feels the shares are undervalued. Otherwise, why would they spend $437 million buying stock, buying their own stock? It sends a signal that management believes the shares are undervalued. It sends a signal that management, with all the things they can do with that money, they chose to buy back their shares. And that's especially important when you're dealing with a company that's growing as quickly as Applovin is growing. There's no shortage of growth opportunities for this company right now. So it's even more magnified when a company like this uses their money to buy back stock. It means a little bit less when you're looking at a company like Pepsi-Cola and they're buying back their stock, right? Because Pepsi-Cola generates billions of dollars in cash, but they don't have very many growth opportunities. So they don't have very many options of what they could do with the money. So if they use the money to buy back stock, it doesn't send as strong of a signal to the market that they believe the shares are undervalued. But with Applovin, with all the growth opportunities ahead, if they're spending cash to buy back shares, it sends a stronger signal. And they say that here, given our confidence in Applovin's future, our board of directors has increased our share repurchase authorization by an additional $2 billion, which increases their remaining authorization to $2.3 billion, with these future repurchases to be funded from free cash flow. That's an even exclamation point on the statement there, saying that we're going to generate so much free cash flow, we're going to use that to buy back our shares, over $2 billion worth of our shares, right? Companies can, and at times they have, borrowed money to buy back shares. You might say, why would they do that? Usually, the cost of debt for a business is lower than the cost of equity. So if they're using the cost of debt to repurchase shares, they're lowering the cost of capital for the business overall. And if you've been following Apple, Apple has done this a lot over the last 5 to 7 years. They've borrowed a lot of money and they've bought back a lot of stock. They didn't have to borrow money to buy back stock. They could have used their free cash flow to buy back stock, but they chose to borrow to buy back stock. Applovin is saying, we have so much free cash flow, we're just going to use that to buy back our stock. We don't need to borrow money because we're generating so much free cash flow. We want to use that to buy back our stock. Management expects the good times to continue. They're forecasting revenue of $1.25 billion at the midpoint for the fourth quarter. If you compare that with the current quarter, they generated revenue of $1.2 billion. So they expect revenue to go up by roughly $50 million in the next quarter. So these increases or these elevated levels of revenue are not expected to snap back down for Applovin. It's the opposite. They expect it to continue. And if you look at the adjusted EBITDA, they generated $722 million of adjusted EBITDA in the previous quarter. They expect that to increase to $750 million at the midpoint in the next quarter. So a $30 million increase in adjusted EBITDA to come along with the $50 million increase in total revenue in the upcoming quarter. And one of the more impressive data points the company showed us in the latest quarterly earnings release is the chart of the net profit margin. I have right here following along this bottom trend here. You can see the net profit margin was 13% in the third quarter of 2024. That has almost tripled in a year, all the way up to 36% net profit margin, the bottom line. This is the thing that matters the most when you're in business. Growth is easier to come by, right? I can sell you a great product that cost me $10,000 to create, and I sell it to you for $100. You love it, you buy more of it, you tell all your friends and family about it, and the business grows, sales grow. But I would lose a lot of money on the bottom line, and that wouldn't be sustainable. But what Applovin is doing, growing the business on the top line by nearly 40%, but also while increasing and roughly tripling their net profit margin. So they're not sacrificing profit for the growth, which is more impressive growth. Applovin now is trading at a forward price to earnings of 42, which is more than 3 times the valuation the stock was trading at a few months ago. So the valuation is getting stretched, but the business has justified the valuation, the growth of profits and cash flow. So to update my recommendation of Applovin stock, I'm reiterating that I still think the stock is a buy right now. I've had it rated as a buy all year long. I'm a little bit less bullish on the stock today than I was a month ago or 2 months ago when the valuation was much more favorable. I still think it's a buy, but I'm not as bullish as I was a couple of months ago. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.